Warren Buffett recommends it. Financial advisors swear by it, yet 90% of people have no idea how to actually do it. Index fund investing, the simplest path to wealth that nobody teaches you. If you're tired of complicated investment strategies, confusing stock picks, and financial jargon that makes your head spin, this video is for you. I'm going to break down index fund investing in the simplest possible terms. By the end, you'll know exactly what they are, why they work, how to choose them, and how to start investing today even with just $100. No fluff, no gatekeeping, just actionable steps that anyone can follow. Let's start with the basics. An index fund is a type of investment fund that tracks a specific market index like the S&P 500, which represents the 500 largest companies in America. Instead of buying individual stocks like Apple, Microsoft, or Tesla one by one, you buy one fund that owns tiny pieces of all of them. It's instant diversification. Think of it like this. Buying individual stocks is like betting on one horse. Buying an index fund is like betting on the entire race. You're guaranteed to win because you own all the horses. Here's the uncomfortable truth. 90% of professional fund managers fail to beat the market over 15 years. They have teams of analysts, insider access, and millions in resources, and they still lose to a simple index fund. 1. Low fees. Index funds charge around 0.03% to 0.20% per year. Actively managed funds charge 1% to 2%. That difference compounds over decades into hundreds of thousands of dollars. 2. No human error. Index funds don't panic sell. They don't chase trends. They just hold the market, which historically goes up over time. 3. Tax efficiency. Less buying and selling means fewer taxable events. The S&P 500 has returned an average of 10% per year for the last 50 years. That means $10,000 invested in 1974 would be worth over $1.3 million today. Not all index funds are created equal. Here's what to look for. Criterion 1. Low expense ratio. Aim for under 0.20%. The lower the better. Vanguard, Fidelity, and Schwab offer some of the cheapest. Popular options. VU Vanguard S&P 500, 0.03% fee. FXAIX Fidelity S&P 500, 0.015% fee. SEHB Schwab Total Market, 0.03% fee. Criterion 2. What it tracks. The S&P 500 is the most popular, but you can also invest in Total U.S. Market VTI, International Markets VX US Bonds BND. Criterion 3. Minimum investment. Some funds require $3,000 to start. Others, like fractional shares on Robinhood or Fidelity, let you start with $1. Here's exactly how to start. Step 1. Open a brokerage account. I recommend Fidelity, Vanguard, or Schwab. All are free, trusted, and beginner-friendly. Step 2. Deposit money. Link your bank account and transfer however much you want to invest. Even $50 is fine to start. Step 3. Search for your index fund. Type VU or FXAIX in the search bar. Step 4. Buy shares. Enter the amount you want to invest and click buy. That's it, you're an investor. Step 5. Set up automatic investing. This is the secret. Invest $100, $200, or $500 every month automatically. This is called dollar cost averaging, and it removes emotion from investing. Mistake 1. Trying to time the market. Don't wait for a crash. Time in the market beats timing the market. Mistake 2. Panic selling during downturns. The market will drop 20%, 30%, even 50% sometimes. That's normal. If you sell, you lock in losses. Mistake 3. Checking your portfolio every day. This creates anxiety. Check quarterly at most. Mistake 4. Not diversifying globally. Consider adding international exposure with VX US or VT index fund. Investing isn't sexy. It won't make you rich overnight, but it's the most proven, reliable way to build wealth over time. Simple, boring, effective. Warren Buffett's advice to his wife in his will. Put 90% in an S&P 500 index fund. If it's good enough for one of the greatest investors of all time, it's good enough for us. Start small. Stay consistent. Let compound interest do the work. If this helped you, subscribe for more no BS financial education. Drop a comment. Are you already investing in index funds? Or is this your first time hearing about them? See you in the next one.